Guys, happy Tuesday. What is it? February the 11th? My God, dude, it feels like this year is just flying by. Didn't we just get uh, Donald Trump in office on like January the 6th? 1 month and 5 days. I have a cool guest today here. Chris Sullivan. I've known him for about maybe 2 years, 18 months, something like this. I just saw him at an event. Going to bring him up stage. He is doing some really cool things in the digital space. Has become an expert in the space, well connected. So I hope you guys enjoy this. Let me see if I can bring him up here. Chris, how you doing today, buddy?
Carry
Chris
on.
Sullivan with Hyperion Decimus. I love that name, dude.
Yeah, I don't think we think too highly of ourselves to name the firm after ourselves. So we went with something attempting to be stoic and poetic. So hopefully we can pass it further with some young bucks worthy of it.
You do know that I have a company named after me, right?
I'm specifically making fun of you. Yes.
Thank you.
Also, I don't have a very cool Italian last name. It's a very Mick last name, if you will. So there's quite a few Sullivans, maybe a lot less Cardones.
Well, I have one request to my children, and that is they're two girls. And I said, look, you have a very cool last name. Make sure you don't downgrade.
It's a tough ask, Dad.
It is a cool name. It'd be a hard name to beat. Chris, you've been at Morgan. You've been at some of the big banks. You've been in digital since 13 or before?
Personally, yeah. Professionally, 17, yeah.
Why don't you give us your background in a general way, and then give us some background on what Hyperion's doing and why you're so excited about this.
Sure. A traditional kind of Wall Street background, took series 3, 4, 6, 7, 10, 24, 30, 31, 33, 63, 66, 215, chartered this, that, and the other. Basically learned to trade. That was a long-winded way of saying that. Self-taught quant, then kind of fell into.
When you say quant, what do you mean?
Quantitative trading. Effectively, what that means is you're using data-driven decision making, and then you typically you execute with an algorithm. All an algorithm is, Gary, is an if this then that statement run in a software interface that buys and sells.
Got it.
And kind of fell into the Bitcoin space on accident playing poker in Costa Rica. Most people can remember pretty famously in 13 where they cracked down on money movement as it related to poker playing, and then it shifted to Bitcoin after I won like a decent sized tournament. I'm like, oh, look at this magic internet money. And then from there it was, wait a minute, this aligns with all of the Austrian economics I studied from age 18 to, I still study it today. I reread Hayek all the time and Mises and Rothbard. And then it's, a few years into just the most egregious monetary debasement ever, which is 08. And then that was upsold by 2020. But long story short, in 17, my partners and I had been running a volatility fund beginning in 2010 in our firm Hyperion. And we just were enamored with the value proposition for humanity, that is Bitcoin, the digital asset space in general, and then lastly, the technological advancements, whether it's L1s, L2s, but most importantly, open source. So open source is the future, decentralization is the future. And typically when you get these cycles of centralization, which we've really had for about 300 years, egregiously since 71, it goes hard the other way. And we want to, as astute investors, invest in that potential new direction. Here we are 8 years later, a lot less hair, and we've gotten used to working 24/7.
You're probably having more fun than you had when you were working at Morgan Stanley.
Oh my God, yeah. I wouldn't change how that went, because back then they taught you stuff that
for sure
was awesome. But then 2010 they got rid of all the market making desks. They started pushing managed money. They weren't trading for profit and if I make my client Gary money, I'm going to make money with him. Now it's I'm making money from my clients, which is a very different sort of ethical mantra that doesn't sit right with myself and my team.
Yeah, well, I think in '08, in particular, that bank became a government instrument, not really a trading shop anymore. They used to be ballers, and now they're just taking spreads between government and private, and whatever. The market, I mean, most certainly, it shows you how markets change.
Mm-hmm.
Because if 20 years ago you'd have said Morgan Stanley was a facilitator and not a big O swing trader, people have been like, huh? They've become the Walmart kind of the Walmart, maybe the J.C. Penney of banking. Seems to pay really well. But now you got guys like BlackRock. I think you have some monsters coming in. They're disrupting the entire legacy institutional base. They're all tied together.
Mm-hmm.
These the vendors, the bank, they all live in the same universe with the same contracts and alliances and agreements and pieces of paper but I don't think none of those pieces of paper and agreements expected 2,500 billionaires. Some of these guys are worth more than countries.
Right.
They can buy companies. They can buy anything they want. That was not expected. And that's going to grow from here on.
Well, no, a lot of the investment houses have to compete for talent with these families. Like, I mean,
Right.
I get pulled in those dialogues all the time. And if I was, worth 50 bill, I would find people like myself and my team. Hey guys, I'm going to pay. What do you need to watch my back? I'm not dealing with the freaking banks. You watch my back. If you crush, you'll get a little more. If you don't, you're going to minus a little bit. And then that's what's happened is you've got this explosion of family offices that have sought out talent that largely the 35 to 55-year-old age range has that no one else will ever have. Why is that? Because they were processing trades, tickets, then electronic. They know how to read data analytics. They know fundamentals because that's not taught much anymore, like value investing. And they also know structured finance and deals, right? Whether it's mezz debt, bridge loans, or structured trades, carry trades. Most of those words, nobody knows what it is because it's not taught anymore. And so I think you get to digital assets, which are infinitely more complex, and it requires a higher cerebral, larger tolerance band, more humble stature to withstand it and also absorb data from a place of humility. Because those who know they know nothing, like myself, this is how you win. Live to fight another day, every day.
I just had lunch with, hope they're not listening, with two of my bankers. This is number 8 person I've met in 10 years now. I mean, literally number 8, which is cool. That just means that, see, I look at that and go, wow, you're not going to survive this. Throwing 8 different bank managers at me. Like, really? Why are you moving people around so much? It's not like they're doing mergers and acquisitions. Nonetheless, the point of the story I'm trying to get to is you talk about people that don't know anything, that you get some humility. I'm probably their largest digital client.
Mm-hmm.
That means they don't do any other digital because I'm just one guy, but hadn't read the Satoshi white paper. Hasn't read The Future of Tomorrow. In fairness to him, he said, hey, what would you have me read? And I wrote down a list of things.
Yeah, good for him for asking. Yeah.
Oh, totally. No, but this is where we are.
But
when you have a bank manager not even reading the Satoshi white paper, one of them looks at me and says, hey, do you know who he was? And I said, let me ask you a question. Do you know who made the US dollar? And he was like, whoa, no idea. I'm like, why are you wanting Satoshi? It's unbelievable.
Sometimes I feel like it is purposeful structural malpractice, Gary, because company men and women are obviously not going to be as talented as entrepreneurs by very nature of surviving in a corporation, corporate bureaucracy, et cetera. But at the same time, you would think a storied name or financial institution with a pedigree and a track record would have some sort of benchmarking for their own talent and competency, and it's largely lost. And I look at the whole financial planning and financial advising space. Those are literally the people who couldn't make it at an investment bank and or at a hedge fund or an actual asset manager, whether it's running an ETF for Vanguard or BlackRock, or it's running a hedge fund, or and then you're looking at the pools of wealth that those folks control, and it's terrifying.
Yeah, for sure.
And not so
So
much that what they don't know, it's that they think they know everything.
yeah,
It's a very dangerous position of hubris.
yeah. So if someone's listening to this and they don't know anything, one of my fears about introducing a guy like you is you're so deep in the, deep into the complex pool of derivative trading and swing trading and high frequency. The way I would sell that is, hey, Joe Retail Family Office, you don't need to know so much about that right now, other than without these people, there is not the liquidity that's needed for big, 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 big money to come in. This is where I would like to take the conversation, at least for right now.
Sure.
If you've been in this space longer than I have, I think the deep concern for most of the big legacy traders, banks, is, hey, I know I can get into Bitcoin. Question is, can I freaking get out? And this market now is really, really robust in volume, $50 billion a day. That's a big market, man. It's very.
Well, you have to ratio that, right? You have to look at what's the percentage of the 2 trillion worth of Bitcoin that's turning over at that 50 billion, right? To get a rate of change number, to understand how often that liquidity wheel is going for full circle. And let's compare it to equities, right, Gary? Their concerns are real about liquidity
and why it's important.
And okay, equities require circuit breakers. Well, what is that? Well, Gary, if the S&P is down 5%, we're just going to turn the machines off. Well, Chris, why is that? Well, because we said so. What it really is they can't match orders because all of these managed money passive bullshit products have arrived at an extraordinarily weak liquidity position for the largest traded equity space on earth, which is US equities. And that is why those exist. And if you're going apples to apples, yeah, Bitcoin's volatile, but volatility is an asset class in and of itself. And it's also it's an expression of realness, right? I challenge people to think, if they tried to run US equities 24/7, to see what magnitude of volatility would then be attributed to that. Oh, by the way, check the VIX of your dollar, check the VIX of a treasury bond, and you'll notice that those are not conservative. They're not stable, nor are they quote unquote safe. So it's apples to apples comparison, but this is the deepest. Look at every knife that you've seen down of corrections. These are bought every single time ad nauseum. You've got an extreme fear sentiment position that was hit Feb 3rd, right? Bitcoin in the 90s. I can't even believe that's happening, right? Not 91,000, 92,000 people panicking. And look at the volume that came in to acquire that. You're going to continue to see that. It's going to rip people's faces off both directions. And until you understand that globally bifurcated liquidity has positive attributes to this space and this space only, right? I can trade Bitcoin on one of 15,000 exchanges globally, accessing pools of liquidity that are agnostic to Wall Street or London or blah, 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 and get a real price discovery based execution. And I'm not getting that when all of my trading is isolated to a few indices, a few assets in those indices, literally less than half a dozen exchanges and less than half a dozen market makers. So when you're actually comparing it apples to apples, the choice is obvious. And go try to do that with gold. I mean, that's even worse. I am a gold investor, but you can't just go block trade 50 billion worth of gold. Not possible.
You bring up the circuit breaker, and I know that it's important, but like I have yet to see, there's a couple areas of Bitcoin that I'm still concerned about. One is, hey, like Coinbase not being able to deal with deal flow is a circuit breaker. Technical error or regulatory like trigger, I need to rely the markets are open. That is what the liquidity pool is for. And the reason they put the circuit breaker in there, they're worried about the market freaking out on these algos because they just punch right through them, right? And they just pause. They want to slow the game down. It would be like someone in a Super Bowl game. Did you freeze up on me there, buddy? You look a little frozen. Yeah, I think I lost you. It would be like someone in the Super Bowl game. Chris, let me know when you can come back because you look way frozen. If I'm the only one that thinks he's frozen, let me know. I may be having a technical problem. But imagine the other night when who was it? The Eagles were just destroying Kansas City. If they said, "Hey, we're going to give it a 30-minute break, let everybody get rested up, replenish your treasury, your steroids, and your Adderall." Come on, man. That's not a proper game. Yeah. Okay. He'll come back. Chris is an awesome guy. Hey, if you guys are enjoying Chris, we're going to go into his background and what he actually does for a living, specifically, like what he would do with a guy with a portfolio like mine. Give you guys some details. So repost the room, do whatever you need to do. And he has frozen. You're okay. Okay. Looks frozen. I don't think I'm frozen. So if I am frozen, you guys smash it out. We have a $95,000 Bitcoin day, selling off at $2,427, down 2.51%. Ethereum is down 2.67%. Solana's below $2. $2. Wow. Doge, 25 cents. XRP, 239. XRP, 239. I saw an ad today that I thought maybe it was the worst marketing, maybe even misrepresentative, and or a meme suggesting that XRP could go to $10,000 a token. That is absolutely outrageously stupid. And that market cap has no relative meaning to a company like XRP. I guess if we just make up all the rules, we're going to have all great companies. The other thing in that ad, if you guys saw my post, I don't know what I posted recently, but I got just like 4,000 people just showed up to my follower list that somebody notified me the other day. It must have been that tax filing. But on this XRP thing, the army is so large. I just want to say you might want to remove the part from that ad that says that you are actually actively supporting governments that do CBDCs. You're talking to Washington about being part of the reserve or the strategic stockpile. You're supporting other countries and CBDCs. And then you have Trump and both now the Fed pal saying there will not be CBDC. So I'm just confused on the XRP strategy or messaging. Perhaps it's all there you are, buddy. You back? Can you hear me?
Yeah, there's construction outside our building that just cut power. Luckily, we have backups
that
take about 60 seconds to kick in.
No problem, buddy. I covered for you. I told everybody all your secrets, and now they're up to speed. So
I only had one, so yeah, we're good.
So look, let's reset. Sure. I was just going through price movements. We're down $2,500 today. Things are moving all over the place. I was talking about an ad I just saw on Twitter or X saying that XRP was going to be worth $10,000. What exactly do you do for a guy like me? Let's say a guy's got a $500,000 portfolio. Where does it need to be? Can it be anywhere in the world? It has to be US. And then what would you do for me? How can you help me over what I'm doing with my Bitcoin?
So we come after Bitcoin effectively. And I've said this for 8 years. Like, we operate two hedge funds in the space. One is a multi-strategy absolute return fund that's up 11x since 2018. And then the other we launched with CoinDesk as a joint venture partner, which is a long short on the CoinDesk 20, which is the only multi-billion liquidity index in crypto. What I say to all investors is accumulate Bitcoin first, and then when you're ready to put an actual portfolio allocation within your asset allocation model, whether it's, most people are way overweight real estate, which is fine. Then we come in and go, okay, I want 15% of my equity exposure now in digital assets that are liquid, which is a great transition, because for every $1 you shift from equities to crypto, you're actually getting 3 times, 4 times the upside. So that's really the first dialogue where we come in, is to shift your quote unquote risk exposure away from equities into digital assets, because the value proposition per increment of volatility, per increment of fiat, is infinitely higher from an asymmetric standpoint. But aside from that, the general thing that we do.
Hey, for the audience, when you say asymmetric, what do you mean? And let's quantify it, because I hear people talking about things like XRP and it being an asymmetric bet. And I'm like, I think we're confusing what we're talking about on asymmetry, outsized asymmetry.
Yeah, it can't go to 10,000. That would assume, a quadrillion dollar market cap, which is impossible. Duh. But yeah, notwithstanding being critical of math, of other people's math, what we mean when we say asymmetry is effectively the risk reward ratio of the allocation or bet or investment, right? We want to see 5 increments of upside per 1 increment of downside. And that's really how you look at it. So if you put $15 of your $100 worth of equities in it, and you're assuming a 1 that loses, so you lose 15, right? In equities, you don't even really have 2 to 1. You have like a 0.8 over 1 effectively. And in crypto, and especially, really good assets and projects like a Bitcoin, like some layer ones, you actually don't even have a cap on upside, because these are not saturated in portfolios to the same degree that the S&P 500 or the NASDAQ are, right? Like, everybody already has that exposure.
Right.
It's very difficult to quantify, right? And now we're looking at around about 3 trillion of total equity in the digital asset space. Well, to 10x that is going to take a whiff and a fart of capital, right? So if I go, if I lose, Gary, you lose 15%, you're still all right. You're still sleeping fine, right?
Yeah.
But if you 10x that 15%, you're pretty stoked, aren't you? And that's where betting in line with asymmetry comes in. So that's what we mean when we say asymmetric. And the space in of itself is asymmetric. Bitcoin is obviously proving to everyone that its own asymmetries. It's largely the scarcest asset on earth, and the best asset mankind's ever seen, right behind the 2 greatest assets, which are water first and women second, because without either, humanity has no life.
You need some men too, bro. Last time I checked.
Yeah, but we're cannon fodder, right? Like, men are we're cannon fodder.
And we like it that way.
Yeah, I would never want my daughters or my wife to be cannon fodder. Trust me.
So guy like me shows up. Well, what is the right client? Who's qualified to meet you?
I mean, legally, anybody who's an accredited investor.
I know, but for you, like, do they have to have $1 million in Bitcoin?
I think it starts with 1 Bitcoin per person in your family, because that's just like the best holistic advice we could give, right? Okay, Gary, once you have 1 Bitcoin per person, let's not get in the way of that. We'll help you, talk you through trends, short term, when it looks good to add whatever. We'll help with that. And once you've done that, let's revisit certainly your equity portfolio, but perhaps more important right now is your bond portfolio, because that's negative money mathematically. And why not, if you're not drawing income off your portfolio, you consider this for, 5 to 15%. And then if you dislike it or like it, you can overweight or underweight from there. Certainly, as you've seen, because you've been in for at least 2 cycles here, when you add on corrections, your power of that investment is rewarded very quickly and quite massively from a percentage terms.
Yeah, you have to feed your thesis. When you have a thesis like this, you can't withdraw from it just because the chart changes one day, right?
Well,
Like,
down is good. Down is good, Gary. Right?
yeah,
Down is good. Why? We're
it's very,
trying
that's very, see, that's very hard for people to understand,
because
though.
they're not smart.
Well, most people need help, I would say. And it's just, I think they're not smart because we've never framed it correctly. We've never taught anyone this stuff.
I'll try and frame it correctly.
No, no, no. I'm not saying you're framing it wrong. You
Okay.
deal at an audience level that most of them probably understand what you're talking about. I just think the audiences that tap into this, I'm always wanting to bring it down to hey, let's bring people up
Right.
and
And the way I would show that empathy is people have been trained, conditioned, propagandized, gaslit to associate emotion with an illusion. What is that illusion on the up? Green in an account somewhere. Most likely the money's not there or the assets aren't there if you're dealing with banks and Web2 infrastructure. But with Bitcoin, gold, real estate, hard assets, it's absolutely there and you can be your own bank. So, but then when you take a step back and you're like you or you're like me, you've got cash flows and you've got capital to deploy. I don't want to pay up. I don't want to pay up. I know fiat just goes this way and that there's a scarcity of all assets, real estate, equities, fine art. There's an actual scarcity of assets relative to the pool of global M2, right, which is fiat liquidity, fiat-based liquidity. So why would I want a parabola? The only reason I would want that is if I'm a tourist style investor, which you're looking to trade your way to wealth. And that's not how you build wealth. You already know that. You accumulate your way to wealth.
yeah, I'm not sure that I mean, do you think Bitcoin has to pull money from these other markets to win?
No, it's already won. It's already won. It's Gary. It's if you take the 21.67 million% it's up since inception, that encompasses every asset class on Earth combined total return in the last 150 years. So it's already won. You've got how many states? 17 states proposing reserve bills. You've got countries already doing it. Bhutan very successfully, El Salvador, right? It's already
Yeah,
monstrous.
El Salvador's mistake was not to do more.
It's everyone's mistake. And it's just like, why did they go off the gold standard? That was a mistake too. Like sound money is never a mistake. Bitcoin just happens to have those properties and attributes that make it the hardest money in the world ever, period. Right.
And the most liquid, which is that's a big deal.
Well, and for a quantitative investor like me, that means with that liquidity, I can express a bunch of different theses. We call them alpha concepts. That way, if I've got in my fund 10% trading long short, 10% market neutral, 10% high frequency trading, 10% trend following, 10% momentum, the profiles of those return streams are going to be non-correlated to deliver to us, the investors, a really substantially well-grounded return profile. It's awesome. And without that liquidity, we would not be able to do that.
So I'm making call it a 40% return a year on Bitcoin. I move some of those assets over to you. What type of returns would I expect to see?
Since inception, we've annualized 49.7 and compounded over now 7 years. That's accumulated to a little over 1,154%.
Last year?
54 last year.
Or you
Year
and
before that was 60
before or after fees?
net.
Oh, that's good. That's good. Do you find that people get hung up on fees?
Not smart people. You
Let's
got
talk about that for a few minutes, okay? Because the audience, when you start thinking about some of these people are going to wake up one day and they're going to have 10 Bitcoin. However they got them, they got them. They got 10 Bitcoin. You got $10 million. You never expected to have $10 million. Believe me, you are so ill prepared to handle $10 million. It's easier to make it than handle it. That's why so many people, and I'm really speaking to the audience, this is why so many people go broke. Like 95% of the people that die here can't even afford their own funeral, man. It's so bad. The kids have to do it.
but
So
that's their own fault, Gary. Like no one gives you a free lunch, right? You got to work for it, and you got to seek truth. Like, yeah, is the system bad? Is it corrupt? Is there opacities? And is there n number of reasons to blame someone else? Sure, but really, when it comes down to it, all of the information is there. People like you, people like me, take charitable time out of their day to try and inform people, but put them on the right path to build wealth, create prosperity for themselves and their family. But you have to back yourself out emotionally and be very, very disciplined, develop the process, have a trading and investment plan. And that's how you become indestructible, which is how you become wealthy. And so when I say not smart, I'm not speaking IQ, I'm speaking from a strategy perspective, right? And you know just as well as I, we both value high-end art, right? How do you get high-end art? You got to pay up for it, right? Because of the talent.
you're pointing to yours or mine?
Both of ours. Oil on canvas, man. That's not a hard. Not they can't 3D print that, right?
Yeah.
They probably can't actually. Now that I think about it, that was a bad analogy. But point is that if you are making a fee argument, then you've already lost the battle.
But it's important for the audience because I think people get stuck on fees a lot. I just use it as an example. Look, there are professionals out there that do things that I don't do. Like, for instance, I don't trade my own money. You get me trade my own money, fucking start sharding the shit out of me. One, I'm impatient. I also don't play poker. I won't sit down at a table that's not cash poker because I just don't have the patience to sit there for 8 hours to win the lottery ticket. Now, smash a game for 2 hours, I'll play with you. But I'm either going to walk away with 50 grand or I'm going to walk away without 50 grand.
Right.
I mean, it's so binary.
Mhm.
So I have decided as a mature human being, fuck, I ain't trading my own book. I have no edge, but I can invest my own book.
Right.
I mean, no one tells me what to do on my own investment decisions, but for me to give some of my maybe digital asset profits to somebody that's playing in a space that I like and they're doing something different than I am capable of doing, if they can jack my fees up, why do I care if I'm paying them 2 and 20? Like, I care about the net return.
Right.
That's all I care about. Right? The net return, if I do it, is going to be zero. It's going to be a loss. So I'm just trying to tell the audience, don't worry about fees. Realize you do not have the ability to play in the Super Bowl, just like I don't.
Well, and then in asset management, the higher the fee, the better the quality of the manager. That's just how it works.
Yeah.
And with
sometimes
most of the time, D. Shaw,
yeah,
like
fair.
Like it's anything in life. By the way, my partners and I, capital pays the same fees as our clients.
Yeah,
that's the right thing to do. By the way, investment fees I think are still write-offs. I'm not an accountant, so it's kind of a wash, anyways. And then we have very aggressive client-centric structure on the 20 side, which is high watermark plus 10% annualized. So we got to get you above the highest place you were last year, plus 10 before we share in the gains.
So these guys never make their 20% fee unless they make a 10% yield every year.
That's the benchmark. Yeah.
Chris, why don't people, when people go in and orange pill, I mean, converting someone brand new into Bitcoin or getting some of their old book into Bitcoin, why don't people ask the target, the person you're trying to educate, hey, show me your returns on all your other stuff. Just show me one portfolio. Pick your best one, man. Why don't people do that?
Because 91% of accounts lose money every year.
No, but why don't people that are educated on Bitcoin, instead of using a bunch of words, hey, you have to get into Bitcoin, just, hey, show me your portfolio on your 401k. I want to compare it. I'd like to analyze it and let you see what you've made over the last 5 years. And let's compare it to what I've done. And I think when you do that, you're going to see shit like, hey, I own Reynolds. I own the tobacco company. This person X, I own the tobacco company. My mom gave it to me. She suggested it to me 30 years ago. By the way, my mother was not an investment expert. It was making a 4% yield and just slipping down. And she's not a smoker. So I looked at her and went, look, I'll guarantee your performance, dude. I'll guarantee your stupid little 4%. And she literally converted it the next day. She's up 60%, man, in like 7 months, right? To me, that's the way we convert them. See, I think people are dumb in crypto or outside crypto because we have sold it so poorly.
That is 100% true. I think the story has been more chase returns instead of strategize on, hey, this is what this did, as you're saying, and is the quality of that return stream better than the quality of the return stream that you're getting? Oh, you might be getting a 4% dividend from Reynolds, but the chart's going that way. So the equity principle in that is not benefiting, and the 4 yield's not enough to compensate you. Same reason on, oh, you can get 4.25 in 10-year treasury bonds. Well, cool, but you're -3 to start that bet. Okay, why would I make that bet? We call that a bet with negative convexity, right? That means your returns on the wings are down, right? So it's really a good place to start in terms of the mental conversion is look at your portfolio, show me what it did. Here's what mine did. And then here are the orange pilled attributes that allow me to withstand the volatility. In fact, every time, this is my rule. It used to be every time it's down 30, I buy more. Then it was every time it's down 20, I buy more. Now every time it's down 10, I buy more. And
I think that's the right way to deploy a DCA strategy too.
Well, and then for hedge fund allocations, it's even easier, right? Because you've got some dampened if they're doing it correctly, right? You've got dampened volatility and the magnitude of compounding, right? Every month starts from a new mark. So you know that, okay, if there's an attractive point to deploy more, I'm going to get even more asymmetry, right? And compounding is the ninth wonder of the world.
Yeah.
And if people just consume that knowledge and had strategies, whatever the asset class.
It's interesting you said that, Chris. You said compounding is the ninth great wonder of the world. I thought it was trading between tokens and arbitraging spreads, buying Ethereum, increasing your position 3x and then moving into Bitcoin. Is that the 10th wonder of the world? Or is that just bullshit? And time in the market is still the most important thing.
I don't want to hate on someone's very complex strategy that you just daisy chain together. Theoretically, that can do well. But if you look at the performance of the wallets that have tried that, they all lose money. Look at all these memes. They're all down 90%. But basically, meme gets created on chain. Developers make money. It gets listed on exchange. People pump it up. They fade out of it. Then it goes almost to zero, right? And we've got corollaries to compare that in the equity market. SPACs, they're all gone. They have the craze in 2021. They raised money to supposedly invest. None of them did that. I think they all should be arrested. And there's pump and dump AI stocks all over the stock market right now. AI is vaporware outside of open source stuff like DeepSeek, right? Or on chain like Render. And AI agents that are open source on chain, those things have unknown valuations because they're already doing things no other LLM can do. So
who do you think the winners are going to be in that space, or the losers? I'll take either.
I'll tell you who the losers are. The losers are
maybe
any
easier, huh?
Centralized, closed source ecosystem that already has hundreds of billions of valuation, right? Because remember, these things don't produce any revenue.
OpenAI.
Obviously, yes. And Elon and his investors did a brilliant move to put a mark on that yesterday. That was absolute, Luke Skywalker strategy level Jedi stuff.
What are you referring to?
Because now he's backed Sam into a corner on valuation, and the board of the nonprofit is never going to allow it to convert for profit for anything less than that.
I don't think I understand what he did.
So he put effectively a mark to market on the valuation of because it's still a nonprofit org.
He being who?
Elon, by offering to buy OpenAI for 97 billion.
Oh, I didn't see that, dude. So he
Tagged,
made an offer
yeah,
at 97 billion. How much have they raised? Like ridiculous amounts.
I think 300. I don't know the exact, so I don't want to misspeak, but somewhere around.
So anyway, he put a flyer out there, said, "Hey, I'll pay you less than 100 billion. You're marked at 300, 400. That's going to be really hard to explain."
Oh, someone's commenting. Elon, see, there is. Yeah, he did. He obviously did that, and he said that he has. It should be open source, and it was supposed to be a nonprofit. But nonetheless, what the point is that for software specifically, open source, transparent, decentralized, and blockchain is the only answer going forward. How long it's going to take, we can debate. Whether adoption occurs at N rate of change or at R rate of change, it doesn't really matter, because the cat's out of the bag. And then, oh, by the way, again, Elon's put this into the ethereal plane that we should put all of Treasury on blockchain. Well, obviously, so should voting, obviously, right? It speaks for itself. These people at Treasury and DC, they are our employees. They are allocators of our capital. They obviously are committing fraud, and whoever is guilty of the specificity of each of those should go to jail for such.
Fact.
Right? And every one of us should get a tax holiday until that money's recouped.
That's where I'm at, man. I mean, I asked a lady last night who was suggesting that, Doge and Trump are being draconian and breaking the law. I'm like, wow, I just walked into Enron's offices. I'm Arthur Anderson and McKinsey. You're suggesting that I just let them keep spending money. Are you out of your mind? Well, you can't do this legally. Hey, I can pause payments all I want.
Mm-hmm.
Fucking pause the payments, strangle all the little criminals. They will scream. They will be like, "Oh, where's my drug money?" And hey, send me an invoice. Show me what we've been doing as Coolio Mulio, and I'll release the funds tomorrow afternoon.
Mm-hmm.
This is going to be so easy to do.
It's actually the start of the end of the central banks too. Because why all this fraud, waste, and abuse even occurs in the first place is human capacity to conjure and counterfeit capital, right? The monetary base. The private central banking system globally is the head of the snake, the Hydra, and out of that Hydra is these globalist, bureaucratic, deep state, minion, cabal, whatever, many names for the same thing, right? All it does is put debt slavery on the backs of good human beings across the planet. No country is different. There's very few countries without this central banking system as part of its apparatus. And it's our legal constitutional right to know and command every penny that goes through our system. And to see these politicians, I'm not a right or left guy. I'm a right or wrong guy. And
like that.
A Dr. Paul, libertarian, a anarcho-capitalist Austrian, like that's the lane I live in. But also there's a little bit of classical liberal thrown in there, right? A la Descartes, laissez-faire, Wealth of Nations, Adam Smith. So obviously that all went into the founding of America, right? Our entire mantra that was the Declaration of Independence is reiterating free market principles and rules endowed to us by the Creator. The central bank stands in direct opposition to that, both physically and spiritually. So all these whiny little leftards, their gravy train, at least it's ending. It may not be done yet, but it's ending. And I think what they're going to find at other agencies is actually going to blow people away way more than USAID.
Yeah. It's going to be very difficult for me Marley to fill in the farm this year. Now I know, hey, we are using money to kill people, enslave people.
Mm-hmm.
This isn't now, hey, I kind of know. I watched some, James Bond movies, and I think there's a dark, dude, this is now in my face. I mean, hey, we use money to help. I don't know what we did, right? Like now it's, hey, I'm part of the problem. And I love the idea of having a class action suit. The Democrats want to file a class action suit against this judge. Bring it, dude. I think that would be really awesome. And then you and I and 140 other million people will file a class action suit. I want all my money back. I don't want just the forward money back. I want all the money back that went to weapons of mass freaking destruction. The IRS is sitting inside Facebook, Google, and all. Like, this is criminal, man.
Yeah.
I want it all back.
Yeah. So
if the country has to bankrupt itself, I want my damn shit back.
Newsflash, it is bankrupt.
Exactly, dude.
It is bankrupt.
That's exactly right.
And it's not just like bankrupt a little bit. Let's just run through how, if I was in charge of Social Security, how I would make it solvent. And this is just for the listeners' purposes to show people how easy the fixes are for all of these problems that were created by the globalists, put in place by the central banks. All right. So the average person, let's say, pays, I think 600, let's say 500 grand into Social Security, right? And let's say it's 25 to 65. Well, if I'm running that pool of capital, oh, by the way, it was absconded with by Obama. There's no capital in there now, right? It was already stolen. There's, in fact, bonds on the obligations to pay that capital, which is like double leveraged. But wouldn't it behoove me, Gary, why don't I create a natural liquid market for my bonds and or credit lines? Let's ladder the maturities so that our tax-paying base gets the benefit of compounding. And let's just assume a 4.5% 10-year yield, which is a pretty good market rate for investment grade debt going back all throughout all time. Somewhere between 4 and 6 is that balanced long duration interest rate. All right, well, what does that mean? Every 11 or 12 years, I'm doubling the money. So for purposes of this equation, let's say from 25 to 65, I've quadrupled my money. And if my pay-in was 500,000, that's $2 million. And then, okay, I'm going to buy the long end of the curve, assuming I live another 30 years to 85. And I'm also going to get a 4.5% yield on my 2 million. Well, almost everybody can cover bases by that. Then you give that payee the ability to transfer that bond base to their kin. And this is how you build wealth and prosperity in one generation. Easy peasy, lemon squeezy. But instead, we have debt obligations on our unfunded liabilities to the tune of 200 trillion. So we are already insolvent. And see how easy that is? And I'm not the brightest star in the solar system, Gary. That is a very simple way to create a liquid market for my treasury bonds, forced savings and investment into a respectable compounded return, and almost all but guaranteeing someone can't blow themselves up and creating prosperity bottom up. Instead, my parents can't get more than $3,100 a month, and they paid in millions. Well, how's that fair, right? And the whole point is that it's not equitable, it's not fair by design and on purpose.
What changes are you seeing in the market? Because I'm seeing quite a few changes. Is your business growing now? Is it expanding in a way that you're seeing new entrants? I mean, what are you seeing that's different today that wasn't here 2 years ago even?
What is beating down, I mean, this, I went on kind of a speaking tour the last 3 weeks at even equity conferences for the first time, Gary. So that speaks to what you're just asking about. I think you're seeing more and more people orange pilled plus red pilled, where, okay, I see fiat. It's going to nothing. the dollar chart's atrocious. It's already basically nothing since 71, 98% since 1913. What are we doing about it? Basically nothing. How many choices do I have to allocate capital to fight this? Very few. And we all know that the stock and bond market is a house of cards sitting on a pile of sand, right? So, noting all of that awareness has created extreme demand for both diligence and education process for both our hedge funds, because basically you and I, some other families, other high net worth, some orange pilled folks, we've been lucky to be early. It's still early, to be honest. And then there's a little bit of a scramble to deploy large pools of capital, Gary, because people aren't recognizing how liquid Bitcoin is, back to your earlier point, or how liquid the entire space is. Like, look at the stablecoin volume. Look at the the B2B transactions. This makes the existing Swift infrastructure, it looks like a fax machine at best. I mean, that's kind of insulting a fax machine, to be honest, because at least that's a secure line of communication. Um, so, the price in fiat is just opportunity. It's not risk, because at some point while you and I are still breathing, it's not going to quote in dollars. It's just going to be a Satoshi.
Well, I mean, just the whole penny thing, right? I'm talking to the bankers. Trump's going to stop making pennies because they cost $2 to make. See,
Three. They cost $3.
The Satoshi thing solves all of that. Like, you don't. It's so silly. We're trying to roll a stone wheel. Awesome. The wheel was an awesome thing, man. But putting a stone wheel on the 405 at 3 o'clock in the afternoon is not a good solution. It's just not a good solution. Okay, it's going to end up really messy. That's the way I see almost all the legacy constructs, and I do mean constructs, not just businesses, but like alliances, marriages, the whole thing. This is actually happening much faster than I expected. Now, this is on steroids, and I think the whole ball of wax comes unraveled in like the next 3 years, dude. Like I think it's going to really be, it's going to all happen in this administration.
For a plethora of reasons. One, you can bet your bottom dollar the globalists are going to roll out a dozen or so false flags. Like, those are
coming, man.
They're
totally.
Coming. And then, you've got accelerations of corporate defaults, accelerations of real estate defaults, vacancies out the wazoo, work from home. Then AI basically can do. But by the way, the best part of what these machine learning models, because I really don't like the word AI because it's not sentient yet. So if we're going to be orthodox on definitions, the fact that it's not sentient takes away from that. But for this purpose, we'll say AI. It can do every single job that the government does currently. And maybe you get, out of a pool of 20 people, you need one person to watch the model. Okay, that saves infinity money. Oh, guess what? Decisions are made via what? How are my algorithms made? Via logic and reason, self-adapting based on your machine learning exponentials. What that means is new data gets weighted more than old data to help your logic and reasoning be precise, right? That's very simple processes. And whether they like it or not, this is occurring. Of course, they're not going to like it. Why? They've been on a gravy train getting paid. I think AOC is like 28 million. Elizabeth Warren took more money from pharma than God himself, right? And then they're gaslighting and lying in front of the public over and over again. They don't deserve a job. They deserve a prison cell, period. They've committed crimes, the least of which is treason, by the way, right? So here we are at a point of inflection that the rate of change of acceleration is going to happen faster and faster, whether anybody likes it or not. And it's good. It's going to be, train wrecky, volatile, but that's how every single, you think Dark Ages to Enlightenment was an easy process? Do you think Enlightenment to Renaissance, any of these transitions, the end of the world wars to the growth period of 50s, 70s, none of those were easy. It's just our population has been preyed upon with fake food, fake money, fake entertainment, and they're lazy and they need to be woken up.
Fake icons and heroes. The worst thing you can do to a society is give them fake heroes, man.
You
Like
know, and that,
we have lost total trust in every. I think actually why I do this and people like me doing this, I'm just so authentic. I think people are like, man, I haven't heard a guy talk just straight shit in a long time. When did our world become so messed up that authenticity became the commodity?
well, when it was censored, Gary.
Yeah, of course, exactly, dude.
So when you
Exactly.
remove it, then it has more value. That's a scarcity function, right? It's an equation. Um, and that's why you're doing what you're doing. I'm taking time out of my day to help others in what way I can with my limited skill set. But I see a comment here like, we are not to be in fear. The point of the information that you're giving and I'm giving is so that you're empowered, you're hardened, you're courageous, you're confident, not with hubris or misplaced ego. And if people want to do the research, try and have as many ego deaths as you can. It's good for you, but not to go on a tangent. So that you are in control, because you are. Like the best way for us to repel these demon, you know, what is Andrew Jack, den of vipers, or your money changers, cabal, whatever, is to raise our consciousness collectively, opt out, and say no. There's way less of them than there is of us.
Absolutely,
They
man.
exist at our behest. And specifically with government, they're literally our legal employee. They cannot tell us what to do. We tell them what to do.
Yeah, the best thing anyone can do that cognites or this resonates with you, best thing you can do is go through your credit card statements and your checking account and go, hey, who am I feeding that is a bad guy? Like these companies are public, man.
Mm-hmm.
90 days of earnings drop is a big deal to them.
Mm-hmm.
They strangle them, okay? Look at what happened to Budweiser. That was a moment, man. It's like, whoa, if everybody gets behind this real quick, look what happened with Trump. Okay, 3 times we could have got him elected a third time.
Mm-hmm.
So
Well, technically, he was elected a third time, if we're actually counting properly.
I think it's a blessing, by the way,
It was.
that he didn't get in, and he's in now. Bitcoin most certainly was not ready, and in fact, the whole market, they hadn't been beat up enough with the severity of how much abuse there was.
Mm-hmm.
These narcissists took the next 4 years to rape and pillage, never thinking anyone. They didn't think the guy was going to be alive, dude. So they just did whatever. They never thought an investigation was going to occur.
We're just opening Pandora's box with that. Like, in my view, everything's going to come out, not all at once, and certainly not easy, but like bioweapons disguised or named as pharmaceutical products and vaccines, funding wars, the collusion between NATO and Mossad and MI6 and CIA doing all this dark stuff since inception. All of those truths are coming out. And effectively, the end result for people is going to be a little bit shocking and a little bit PTSD. It's like, oh my God, I don't really want to know all this. Well, of course, you don't want to see how the sausage is made. That's a reality all of us can agree on. But with truth becomes power. And that's an exciting time to be in. And hopefully the 3 to 7 years it takes to get through this, my kids will be better and everybody will be able to build wealth and prosperity. Because just the example I just gave on Social Security, if we really wanted a social safety net, boom, there it is. You just made everybody wealthy instantaneously over their 40-year career from 25 to 65. It is possible. And in this current technological state, agricultural efficiencies, we live in abundance. The globalists, while I'm a super conservationist with the environment, clean water, clean air, etc., carbon's not a pollutant. There's no global warming, but we need to address pollution. Pollution. What does that mean? Stop spraying metals in the air that get in the soils and water. Stop putting poisons in the food and poisons in the soil like glyphosate. All of those fixes we can turn that off by next week, Gary, and everything recovers immediately. That's the beauty of this. It's so easy. And then you get the kicker. Dr. Paul could be the leader of the Fed.
Yeah, but you're going to, every food company, their stock price will get crushed at 40%.
Big freaking deal. Not my problem.
I agree.
They
I
shouldn't have been
agree.
selling poison. In fact, they should be
Let,
delisted and bankrupted.
let's see. Let's see if we have the stomach for it. But I mean, yeah, I agree, man. Um, Hey, there's a question here. Dino's asking. We're going to start
Sure,
wrapping up here. I
sure.
love getting to some of these questions.
Yeah, happy to do
D-
anything. Today.
Dino says, Mr. Sullivan, wow, what honor. Mr. Sullivan, to what extent will Bitcoin be primarily used as borrowing fiat tool?
As collateral for dollar loans, that's what I think he's asking. I think for as long as there's a willing, selling short of that position to then create the fiat to give. So I'm not going to get in the way of anybody making a market on that transaction. But I think the demand side that's asking for dollars to collateralize against their Bitcoin, I think it's going to dwindle further and further. The more use cases and payment options people have to use their Bitcoin, it'll give more transactability, and people won't feel like they're just hodling. And I don't want to ever use my Bitcoin. I'm in this camp too, Dino. So I'm speaking from personal experience. But the reality we have to prepare for is that USD component of that equation is not going to be there.
I don't understand why you say that because
I think you do to you basically will have Bitcoin as the denominator, not USD. So
so you're complaining what your bitch is. Hey, why would somebody borrow U.S. dollars and collateralize Bitcoin?
no, I know why people are doing that now. It's because they don't want to sell their Bitcoin,
Yeah.
but need liquidity, and people are willing to lend liquidity on Bitcoin, and that's a great attribute of Bitcoin. I'll hold, dude. You let me hold your collateral. I'll give you dollars, because if you default on my note, I'm taking your Bitcoin. That's a great trade for any lendor of dollars, right? I'm just saying that
If I gave you 100 Bitcoin to hold, would you give me 95 Bitcoin back?
um,
Is a lending? See, I think you're gonna. Everyone disagrees with me on this. I think the Bitcoin for Bitcoin lend is gonna explode.
it is. There's already Lightning Network channels privatized doing it right now.
Oh, can you introduce me?
I can. Yeah. That's the way.
See, I like that trade because it removes a lot of the collateral risk. As long as this entity doesn't get those lent coins don't get locked up if there's and required to be paid back in some kind of bankruptcy.
Well, the beauty of this is a channel that's privatized, and you can customize a smart contract over the Lightning Network channel. It's like it's the fix of.
Can I get size off?
Not. I mean, it's currently in beta. Size of like 5 to 10 BTC is there, but as we're creating this liquid pool of what I would call investment grade collateral needs, whether it's an investment bank like a Cantor Fitzgerald, or it's a bank like J.P. Morgan, or it's a hedge fund, or it's a mining firm, there can be this permissionless pool of capital that's borrowing and lending Bitcoin itself, getting Bitcoin returns for the uses of collateral, right? And what's fascinating is people are already accepting this as pristine collateral, and that's what I think it is primarily. But I don't want to sell Bitcoin short that it cannot recapitalize the entire planet away from the central banking system. There will not be fiat if you don't have a central bank. We all want to get rid of fiat. There should not be any fiat, period. Every instance of value-based commodity-backed currencies has created prosperity, and we need to revert to that as soon as possible. Good question.
Yeah, no, it is a good question. I've been a little surprised that I've thrown this idea by a couple of really large players, and they're like, "Wow, no one's." I'm like, "Dude, the benefit for Bitcoin is really cool. Like a lot of the collateral risk is removed."
Well, then you put the execution to a smart contract, and all the human risk is removed. Bada bing, bada boom.
Bada bing, bada boom. Where do you see this market going? Do you think we're going to get a strategic stockpile this year? Does it matter? I personally think the Bitcoin bros are going to be disappointed with any kind of announcement they're waiting for. Well, what's your estimate on how quick this possibly could go, at least we know. I don't think we're ever going to be told, "Hey, we're going to buy 1,000,000 coins." That would be stupid. Why would he tell that to anyone? He's not
Well,
that kind of a general.
no, and
He might tell them after and
to,
brag about it.
right, but even that on its surface, while I agree we need to have strategic water reserves, strategic oil reserves, strategic metal reserves, like it should be a component of reserve portfolios. I agree with that. Telegraphing it is ridiculous, embarrassing, and unprofessional. But then in the reality, all right, there's only 21 million coins. In reality, there's only about 0.8 million to compete for, right? Point 0.8, it's a little less than that. And all right, I've got to then use my dollar that I've earned, that I've paid taxes on, to compete with my own tax paid dollar that the federal government's going to use to accumulate an asset I'm trying to accumulate. That doesn't sound like a trade that works out in my favor, does it? So I am not necessarily for a very large, competitive bidding process for Bitcoin. What I think they start with is the confiscated coin that they have in their purse, put that to a strategic reserve, create a portfolio of strategic reserve assets for our tax base, including land itself and farm and forestry, hemp farm, wheat farm, all of
Any
that stuff.
any resource, grab
Yeah,
all the resources.
we've got infinity capacity here in America that's so untouched and untapped that
Totally.
investment in that would create a ton of wealth in of itself. So let's do that first. And then I think if states want to take it on their balance sheet as a reserve asset and or as a pension asset, that and maybe defend against the federal government, that makes all the sense in the world, right? Because that gives the states more autonomy. Then the currency system itself is less weaponized against the entrepreneurs in that state and people doing business in that state. And so as a freedom maximalist, I much more advocate for accumulation at the state level while supporting reserve level base at the federal level. And that, but again, that should not just be Bitcoin. It should not just be oil. It needs to be that portfolio of resources that hedge against all things that we can foresee, whether natural disaster or economic. Good. That was a great question, Gary.
What do you think the spread between low price and high price by the end of the year is going to be? Just give me your
Ooh,
band, and then we're going to wrap up if you don't mind.
I love this question. Thank you for asking. The beauty is like
I'm here to serve, my friend.
there's no certainty, right? Like, so while this is a little bit an exercise in fun, you have to arrive at quantitative targets with quantitative methods, right? And so there's a lot of ways to do that: Fibonacci extensions, trend line extensions, confluence zones, pattern recognition, blah blah blah. But what's reasonable here can be capped both directions by on-chain data, leverage ratios, sentiment ratios. So I think your worst case scenario, you're seeing around 71, right? Best case scenario, you're seeing about 280. And there's a lot of middle in there that's highly probable, like a 140, for example. So what we do in a hedge fund is kind of live in between the extremes and try and do well regardless. So I'm not focused on what's the top, because our hedge fund's an infinity business as an allocation. So we're just navigating the peaks and troughs, but those are fair ranges to expect, that I'm not just pulling that out of my ass.
Yeah, I agree with that. Actually, I think that's you're probably a tad more bearish than me. I think it'd be hard to buy.
That was a bear case 71. That's
No. But I just think we've seen that come and go.
right. But I'm always going to praise things with what's the bull.
See, for the audience though, this is really important for you guys to understand. See, this guy every time you guys are like, oh my God, the price moved 11 grand. This guy feeds on it. So when you think about walking into this stadium, this Coliseum, even though it just requires you to go hit Coinbase and Binance and whatever deal you're using, it's so easy. You should always ask yourself, hey, everybody's got a knife on this pitch. Do I have any edge whatsoever to make sure I walk off this pitch without having my freaking brain stuck with a knife?
Mm-hmm. Mm-hmm.
People walk into these trading markets, you don't even know who the players are. That's why I keep warning all these crypto bros. I'm like, you're going to get destroyed this year. you will be removed from the freaking playing field and you're never going to come back. These are animals that are here now.
We are.
They're animals. You
I
get paid to
only
do
like
this.
fear. Like literally, the only reason we exist is so that our investors know when shit's hitting the fan, they're thinking of us going, "Oh, I know the boys are buying." And it's the biggest honor of all of my career to buy fear. And
Yeah.
that's what people need to understand. When you're punting, you're handing it over to people like me.
Yeah. Oh, totally, totally. And he's trading volume. He's got contacts. He knows who's long, who's short, who's got some puppies stuck back at 110 in case he made a mistake. And you guys are just watching charts bouncing between 37 different tokens. Like you're just going to get absolutely wrecked. And by the way, you deserve it. At this point, I've spent too much time educating people. Like you now deserve this. You're
Right.
going to get spanked. You literally have a grown man going, I should not trade my own book. Have you known people like me? I'm an awesome trader with your money, but like, nah, dude, leave my money out of it. Right? I need to hand it to somebody else.
Mhm.
Because my money really should be for longer term investment for me.
Yeah.
Um,
Well, you have to have almost an infinity time horizon, Gary,
mm,
to decompartmentalize the emotional side of it, right? Like if I know, okay, my working thesis on my portfolio, my allocations, my asset based wealth is infinity time horizon, right? All right, that means every time there's asymmetric opportunity, I'm going to try and monetize it, right? And take advantage of it. Doesn't matter if it's real estate, doesn't matter if it's gold. I even bought the gold pullback at 2,600, which was nosebleed highest I've ever bought in the ever. But the conditions were such that it made it another attractive place to accumulate. So was 89K in Bitcoin a month and a half ago. So was 91K February 3rd. You know, I mean, that's all you have to do all the time. And no one can trade their way to wealth because you're going to lose starting that way. But you can sure as hell accumulate your way to wealth.
what would your closing comment be for the audience 2025, Chris? And I really appreciate you being here. The comments I'm getting on a number of these are really awesome. Thank you. I'm sure the audience appreciates it. If you guys are not following this cat, you can find him at Hyperion Decimus.
Yes, sir.
Christopher Sullivan. Where do you want to leave this?
I'd like to part with some wisdom. And if people would do some homework and maybe humor both you and me, go read Marcus Aurelius's Meditations and then revisit Frederick Hayek's famous work, Road to Serfdom. Both of those will empower you and then bring you up to speed, at least insofar as the dialogue that Dr. Ron Paul's had and what is coming to deal with our capital and our people right in front of our face right now. Both of those would be very zen to consume right now.
Marcus Aurelius's
Meditations.
and then Road to Serfdom by who?
Frederick Hayek, Dr. Frederick Hayek. He's
I've never read that.
Yeah, and it unfortunately it was written late 50s. The path he outlaid and warned us about literally exactly happened. So what it will quickly do, both of those will quickly bring up to speed your own hubris and ego and weaknesses, which we all have. I still have my work on them all the time and meditate twice a day. And then Road to Serfdom will just encompass in a less political sense how we got to where we're at now and how we're going to best serve our neighbors, ourselves, our families, and our constituents in the country, and then largely humanity globally. And then, as always, I do like saying this: be kinder to one another. Try not to be an asshole.
Yeah, that's kind of how I end all of these. Hey, you guys don't pay me anything to be here, so like, could you just go out and do something nice for someone today and don't take credit for it? Just do a, top secret mission. Be nice to somebody that, if you're a bit racist, go do it for somebody that you're a bit racist about. Or if you don't like girls, go do it to, I don't know. There most certainly, when I started thinking about being nice every day to someone, one, it gets me out in society.
Mm-hmm.
It was like, wow, that really wasn't that much effort, and I feel okay about it.
Yeah.
There's 2,000 people, 3,000 people. 3,000 people go do something nice. Man, we can all start getting, like, to me, I think we can reverse the karma the positive energy karma. I really believe that.
And once it ticks from negative feedback loop to positive, it just goes nuts. And
Totally.
people have not seen the escape velocity of goodness in so long. I mean, you saw some of it in the 80s, but it's been removed from us the last 25 years on purpose. So
yeah, that's very promising. I love that. I love that. Escape velocity for freedom and happiness and prosperity. That's what we should all go get. Hey, you guys follow Chris. Chris, thank you so much. Really appreciate you being here. Love seeing you at the party the other night. Thanks for coming. How'd you enjoy that, by the way?
that was epic.
Was
Great
it?
people. It gave
1 to 10. Give me a survey quality on.
Well, I'm a contrarian bear, so 10 isn't possible. So I'll get an 8.77.
Okay. Well, I need to figure out how I could have got it to a 9.
No, I mean that's like kind of I'm like the Portnoy scale. You can't, 9.1's like the highest. I'm like 8.77.
Yeah. Yeah. Well, we're doing one in April. It's going to be like getting them ginned in. Once you get it ginned in and you know the right sweet spot for size, it's a really, really good event. I was really pleased you were there. So thank you very much.
Yeah, my pleasure. And pleasure.
All right, buddy. Hey, thanks, man.
Cheers.
Hey, guys. Hope you enjoyed that. Chris is a great guy. It's Hyperion Decimus. Love the word. Love the name. High frequency trading, hedging. He's got 2 funds. One's a long short fund. One's a multi-strategy. He can tell you more about that if you want to reach out to him. Put him in your Rolodex, follow him, see how he does over the next 2 or 3 years. See, this is one thing you want to do with these people that you're meeting. Track them, see what their performance is like in a year. I mean, they're not going to go away. And if they do go away, when you see businesses rotate too much, like I look for in these new industries, who's coming into the industry, how long did he or she stay at that location, or a company that did a bunch of marketing and sales, are they still doing the promotion and the marketing, or are they surviving? Just notice how people move around. Notice what their predictions were and how close to reality they came to, rather than nitpicking every little thing they say, like just the big picture. So anyway, really like Chris. I don't fully understand how he makes his juice because he's so smart. Sometimes it's hard for me to follow him, but he's a bright guy, and there's like, it just shows you the amount of different people, how they're going to take different approaches and angles to building businesses and industries inside this, what I call the Bitcoin industry. A firm like his, what he'll end up doing probably only has like 8 people. He will end up building his book up, and Goldman or Coinbase or somebody big hedge fund will suck them up. In fact, that was some of the people that you may have seen at my show. The people at ARK Invest, they were part of Druid. They had been sucked up into the ARK Invest. Gives them more capital to play with, gives ARK Invest another tool to swing in the market. Anyway, thank you guys. I know we're having a rough day in the market, but this should not be rough. It's 95,415. I will be buying here. I will be placing orders at anything in this area, 94-ish, 92. I got to pick some up here. I haven't bought any in a while because I've been dealing with some other cash flow requirements. So, hey, look, you guys be awesome, be cool, be nice to somebody, and we have a chance to change this planet. I'm actually going to take a part of it. I'm going to be participating on an active level. Would love you guys in, on the bench, on the floor, in the stadium, doesn't matter, dude. Just join the team. Join the team. We're all one team, red, white, and blue. No Republicans, no Dems, no middle people. Dude, can't be in the middle. We're red, white, and blue. Okay, let's rock and roll. See you guys later. Peace.